great friend of the income generation, Steve Forbes, Chairman, CEO, Editor-in-Chief at Forbes Media. Steve has written several best-selling books, and he's also campaigned for the presidency twice. Steve, thanks so much for being back with us on the Income Generation.
Good to be with you both. Thank you.
Jeff Small here. Hey, what's the biggest thing, though, that typical investors don't understand about dividend investing?
Well, I think that dividends sometimes can seem slow compared, especially when you have the kind of volatility we've had in the market recently. We've seen the huge increase in high-tech stocks. But the thing about dividends is it's not a bond, it's not a preferred stock. It is something where the equity value can increase as well. You take Apple, that doesn't have much of a yield, under 1%. But if you'd bought it 5 or 6 or 10 years ago, it's a juicy yield because the company grew. And so you got, even though the dividend seems small in terms of yield, it is actually on your original investment very, very good indeed. Far better than anything you would have found from junk bonds and the like. So again, pick a good stock that has real growth opportunities, and dividends do come along. Someday, I predict, even Amazon will pay a dividend. But look at Microsoft. For years, they didn't pay a dividend. Now they've had both equity, a nice boost, and also the dividend compared to the price you would have paid 10 or so years ago. Looks very nice, too.
So, Steve, you wrote an article recently about why Congress should not propose or enact a ban on short selling. Why would that be a mistake?
Because short selling is a way of bringing reality back to the marketplace, or at least temper animal spirits that can sometimes dominate the marketplace. We all know emotions run wild in the marketplace. Mm-hmm. And so if you think that equities or some other instrument is going up too far in value, it's really no different than selling the stock, but only in this case, you borrow the stock, taking the huge risk. But you borrow the stock and then sell it, but you have to pay that stock back. And if the stock goes up, you're going to take a huge loss. And as you well know, with short selling, the losses can be infinite. Whereas typical investing, buying long, you can only lose what you put in. But short selling does have a place in the market. And the idea that they can dominate the marketplace, well, we've seen recently that ain't true. No matter how big you are, there are a lot of other investors out there who are going to play off of you.
In the past shows, we've talked about taxes and politics, but last night I paid $2.85 at the pump. Energy prices are up 70 cents, $1.25 at the pump itself. And so at what point does that start to hurt a vibrant economy?
Well, it's hurting. It's going to take a bite right now. We do have an economy that I think is ready to roar in the sense that people, after a year of shutdowns, lockdowns, told to be careful and all that sort of thing to cope with this terrible pandemic, people, I think, are ready to have some fun again, get out, intermingle, travel. So I think the economy will do well. But one of the big dangers out there is inflation. The Federal Reserve is going to be printing a lot of money. Washington is spending money like never before in peacetime have we seen this scale of spending. And they don't think there are any consequences to all this money printing, but there will be. And with the dividend stocks, by the way, everything will be hurt by inflation, but a good company will be able to make profits. In real terms, it may not be what it was before, but you're going to still get that income stream that'll be better protection against inflation than even inflation bonds, those bonds that the government sells, hedging for inflation, the way the formula works. I think you do better with a good portfolio of dividend-paying stocks that have a history of rising.
Thanks so much for being here with us on the Income Generation. It's been great having you. Our pleasure once again.
Thank you. Thank you, David, and thank you, Jeff.
Now it's time to bring in a great personal friend of mine and Jeff's, Eddie Ghabour, co-owner of Key Advisor Group in Delaware. Eddie's also the Amazon best-selling author of the book, The Common Sense Bull. Eddie, thanks so much for being here with us today on the Income Generation.
Thank you for having me.
You know, when we get through this coronavirus economy and we come to the end of it and things start to open up, how do you think that's going to officially change the markets and the economy, let's say, over the next 12 to 24 months?
Well, I think we're going to see polar opposites of what's going to happen here. We've told our clients we have two dynamics happening right now. We are going to see the largest acceleration of GDP growth on a year-over-year basis since post-World War II, as well as consumer spending. And that's probably the next 4 to 6 months. After that, our best guess right now, and we'll know when our data tells us so, that by fourth quarter, we will be de-risking because this is the mother of all bubbles. And I think that bubble is going to start to show signs of cracking, like the NASDAQ already has. And it'll start cracking in the fourth quarter. And then by sometime next year, we think we'll start to see certain sectors start to pop. And we don't want to be on that side of the trade.
Eddie, great words of wisdom. You always help our income generation every time you're on the show, and we thank you for that. Thanks so much for being with us today.
Thank you, Dave.